red price action, looks weak. It's got to fill this gap here. It doesn't look great at all. If it
Oh, hello everyone, it's Susie again from Esoteric Trading Solutions. I hope you're well, hope you're looking after yourself, hope you're looking after your beautiful putty cats, your beautiful animals, looking after your parents, your family, being kind to everyone in your world, also being kind to the environment and the fauna, and also just being kind to strangers in the world, just to make this world a better place. And for those that are taking Christmas holidays and Christmas and going away, Merry Christmas, have a very safe and happy new year as well. Just very quickly, I thought I'd just look at Bitcoin and just discuss what I look at in terms of a trading strategy. Many people look at different types of trading strategies. I actually look at basically discretionary. I try and keep my trading strategies as simple as possible. I focus mainly obviously on price action. That's the most important thing. And I focus on some very simple techniques. Now, some people don't even look at indicators or anything. They just focus on price action, and that's absolutely fine. My attitude is whatever works for you. If you make money out of it, then stick with it. If you don't make money out of it, start again, paper trade, back test, and keep putting something together that actually works for you. Now, I obviously trade differently depending on the market that I'm actually trading. And what I mean by that is, sometimes I'll hold things overnight and sometimes I won't. If it's a continuous market, for example, a 24-hour market that doesn't stop, I tend to hold things overnight, like in the FX market and in the cryptocurrency market. But if it's not a continuous market, like the US equity market, the physical market's not continuous. It closes, it has an aftermarket after 4:30. And it closes around 8 o'clock at night for the aftermarket, then it's not a continuous market, because overnight you have that gapping risk and that price risk. So if I'm trading equity indices, I don't tend to hold those overnight, okay, because I don't need that risk. Why introduce more risk of gapping risk when you don't need it, okay? So depending on what product I'm actually trading will determine whether I hold something overnight or not, generally as a rule. And also it depends on where the price is and all sorts of things. But generally as a rule, for equity indices, I don't tend to hold overnight, as I said, but certainly for FX and cryptocurrency, I will hold overnight, and also depends on my time frame. So with FX, you can have guaranteed stop losses. You do have to pay for them. The problem is in the cryptocurrency market, you don't have guaranteed stop losses, which is annoying, because if something gaps down, just because you've got a stop loss in place, it doesn't necessarily mean you get filled there at the stop loss. It means that if it trades through that stop loss and it didn't trade there at all, there was no price or no trading there, you're going to get done at the next level down if you've got a stop loss in assuming that you're long. Whereas the FX market, if you've got a guaranteed stop loss where you pay a premium for that guaranteed stop loss, they will fill you there even if something didn't trade there. Whereas just a normal stop loss, if it gaps through there but it didn't trade there, you won't get done, okay? People need to understand that, because a lot of novice traders don't quite understand that. Anyway, looking at Bitcoin, Bitcoin held its big support level the other day. Now I did do a market overview of this, and I put it on Patreon and FlixChimp, and I did say that it would get down to about 6,500, and that's pretty much where it got down to, interestingly enough. And it pretty much held this position here, which is amazing, okay? This position here is 6,500, and as you can see, the trend line here, a very simple trend line at the bottoms, it's still in an upward trend line, okay? Now, obviously, if it breaks that trend line on the way down, it's going to look quite bearish, but If you look at the monthly chart, and I always go back to the long-term charts when I'm looking at anything or trading anything, I look at all time frames. This pretty much held this 6,500, which is really important. Now, notwithstanding, on my channel breakout, I have a sell here and a sell here, and it does look, obviously the high was lower, which is not great, but it still held the trend line up. So the monthly market for Bitcoin is up in that trend line. So basically, as it goes, you would buy off that trend line for a move up with a stop loss just under the trend line, okay? And that's pretty much, excuse me, how you would trade this. Also, another thing I look at, I do like very much, probably the things that I like the most are trend lines, price action. Of course, price action is the most important thing. If the price is positive or negative, obviously red or green or red or blue, whatever colors you use. Price action is the most important, clearly. Trend lines I love, and also probably my even greater love is pivot points. Now, a lot of professional traders tend to use pivot points, and I like pivot points very much. There's a calculation for pivot points, like your high, your low, your close, over three, or it might be something different again. But pivot points work very similar to support and resistance. Okay, so the next level up is resistance, next level down is support, and I do like pivot points very much, and I do trade very much with 1, price action, 2, pivot points, 3, trend, and then I like to look at the parabolic sells, and that's pretty much it. And look, I might have a few other things on there, like this channel breakout thing, but my main trading strategy pretty much is price action, 1, as I said, 2, pivot points, 3, trend, and then I might look at some peripheral things like, parabolic SAR, which is this here, the dots, and maybe a channel breakout. And obviously this trading strategy is done very well. It's basically up, 71% or something like that. And, it's had a fairly low drawdown of 0.2%, which is pretty good as well. And that's another thing you need to look at, is the drawdown of any trading strategy, the profit factor, and obviously the percent that are profitable. Now, in this longer term trading strategy, percent that are being profitable is quite high, 71%. Profit factor is 40.76, and it's had a very low drawdown, which is great. And on the monthly, it doesn't do a lot of trades, but as I said, I do look at the monthly for the overall trend, and I never go against the trend. Okay, that's something you should never do. If the trend is up, you should be looking at a long trade. If the trend is down, you should be looking at a short trade. That's number 1 as well. Never go against the market trend. Okay, so a lot of traders would have bought off this trend line. I know Peter Brandt was out there, who's a fairly well-known trader, saying that it held 6,500, and it certainly did, which is good actually. So if you go to the 1 week, I look at all time frames. Oh, let's just go back. Actually, I just want to go back to the monthly again. So it's held that, and then if you go to the 1 week, you'll see also another thing I do look at is the 200-day moving average. It's very important because it's an overall trend. If price action's above the 200-day moving average, it means that it's bullish. If price is below the 200-day moving average, it's actually bearish. Okay, so again, if you bring this down, you can actually see that it held this position, and hopefully it'll still hold and be above the 200-day moving average for the weekly, and the price trend for the monthly. Okay, so that's on the weekly, and I look at all time frames. This is pretty much what I do. Okay, because it's just the way I trade. So if you look at the weekly, you can actually see it a bit more clearly. It looks like it's obviously bounced off that level there, which it did, which came in at around just under 6,500, maybe 6,437 or something, depending on what you're looking at. This is Bitfinex's pricing, I think, in TradingView. And hopefully we're going to get a bounce, hopefully up to 9,221 on the daily. We'll have to see how this thing trades to get through this 200-day moving average. All right, so essentially this is giving me on my daily a buy in the channel breakout with a tight stop loss. And if I go to my 4 hours, I love my 4 hours. I do tend to look at the 4 hours very much so in terms of my trading strategy that I use. And the 4 hours certainly gave me a buy. When above the trend line, it needs to get above the 200-day moving average for it to be quite bullish. Okay, so if I look at that, if I go from the monthly to the daily, monthly, weekly, daily to the 4 hours, this market is telling me to buy it. But obviously I'd need some fairly tight stop losses in place so I don't lose too much money, because I'm looking at least at a profit ratio of 3 to 1. Whenever I put anything on, I'd want at least a profit ratio of 3 to 1, which means 3 units of $3, say, for 1 unit of risk. So in other words, 3 to 1, I get $3 for $1 of risk or better. So I'd really like that ratio to be a lot higher than that. So in terms of Bitcoin, I'd like it to be, maybe even 5 to 1, $5 of profit for 1 unit of risk, that sort of thing. That's pretty much what you should be looking at in terms of the cryptocurrency market, because we know the volatility is a lot higher than, say, foreign exchange. Within foreign exchange, I'd be looking for a unit of risk of 3 to 1. But in the cryptocurrency market, generally, if I do put something on, I'd be looking for at least a minimum 5 to 1 ratio, generally, with a stop loss in place. Now, many people may have interpreted this when it went through 6,500 as a break of trend, but sometimes that's what markets do. They tease you and they test you, and they look like they're breaking trend when they're not necessarily breaking trend, okay? And generally you do find that a lot around major trend lines, okay? So you need to be really careful there when you are trading markets. I do like TradingView because, it's very clean charts, and effectively, it sets up the pivots quite well, and you can see the pivots very well with support 1, 2, and 3 as well, and a break of trend. So I'd be a lot happier if Bitcoin was above this 200-day moving average on the 4 hour and the daily, but we just have to wait and see. As you can see here, it did a lot of volume as well, so it held quite nicely. So again, I'll break it down. I like to look at all the time frames on the three hour. Just gives me an idea. It just gives me a good idea of the market here on the 2 hour. And again, it depends on what time frame you trade, what you regard as your trading time frame. Again, everyone has a different time frame. For example, if you're trading the hourly, again, you'd be buying this on the hourly, okay? Everyone has a different time frame, but I look at all different time frames. If I'm going to get into something or if I'm going to get out of something, I like to break it down, okay? So technically at the moment, to me, Bitcoin looks quite good, providing it holds that big picture of 6,500. Now, for me, if I was going to put on a trade, not that I'm advocating anyone else to put on a trade, I would even bring it down to the 1 minute, if possible, or the 5 minutes. And again, everyone trades differently, but for me, that's where I would bring it down to if I was looking to get into this, and I'd be bringing it down to this level and really looking at where it's held on a very short-term time frame if I was going to be buying. So if I was going to be buying here at the moment, looking at this, I'd be obviously wanting to, look at where it held on a very short-term time frame. So at the moment, it certainly has done a lot of work here at this 6,500 level, and it bounced off there and that trend line, which is great, and that's what you'd expect to do in a bullish market that's still on an uptrend for the monthly. And potentially on the 5 minutes, this could potentially get up to about 7449.51. So if I was going to enter for my own trading, I might be looking to get in around this 7131, where it's sort of held around here, and I have a fairly tight stop loss, probably around maybe 70, 80, something like that, for it to trade potentially up to about 7,400, 7,500. Then if we take it back to a longer time frame, the 30 minutes, you'll see that's where it basically got sold down around that 7437. Take it back again to a longer time frame. It just gives you a great idea to where the selling pressure was, and certainly the selling pressure was just under that 200-day moving average. Anyway, guys, this is just education only, food for thought. This is how I look at markets. Everyone looks at markets differently. Everyone has different trading strategies. As I said in my intro, some people trade on quantitative trading strategies where they write, in Python, which is basically, a language, a language where you can actually, draw data from everywhere and set up your own charts and graphs and everything else. Other people write in all different types of computer language to set up their things, and they trade algorithmically, which would be a number of combinations of different mathematical type formulas and whatever. But other people like myself tend to go discretionary. I do like discretionary, but I'm also aware of algorithms and everything else, and I'm actually starting to look at those too in terms of Python. So I'm learning a little bit of Python as well, because I think these days you have to be really aware of where the algorithms come in, and where they're looking to sell down and where they're looking to buy up. And often, with some algorithms, they will look to sell on a market that has broken a major trend line, but you do need to be fairly careful when a market has broken a major trend line. If it's just testing you like this, and where there's no follow through, and basically coming back within the trend line, and you often do see that anyway. Anyway guys, that's just a short video for today. Hope you're all well. Please do look after yourself. Please look after your family and friends. Look after your putty cats, your beautiful animals. And please just be kind to people in the world, just to make this a better place. Thank you very much, and Merry Christmas and Happy New Year, and hopefully you have a safe one. Thank you. Also guys, this is a disclaimer. I don't give any financial advice. This is just for teaching only. You need to look at your own information, your own risk tolerance. I'm not a financial advisor. Don't